Hello everyone, welcome to XM live trading session in the beginner's room. It's time for London Open breakout strategy session with me. My name is Junaid Bahit. I am trader, analyst, and forex instructor. Started trading back in 2011 using fundamentals, technicals, and sentiment for my analysis. My trading style is price action swing trading, and as you can see, we have London Open. That's my intraday, let's say, the best intraday trading strategy, which is not the only. I also trade intraday. I trade generally swing trading, and also longer term is also part of my trading style. I am an investor also long term, and I keep an eye on the macro fundamentals, also deep diving into sectors, having in-depth analysis also in the sectors and companies, which is opening some opportunities for swing trading here and there. Not that price action it's being dominated by macros. For me, price action for trading is the best thing. So that's why I am fully trusting price action as a swing trader. I like to use it the most. And if the fundamentals meet technicals, and I'll be even more happy. But otherwise, if I have to choose one, that's going to be price action. As you can see, not saying technicals because technicals are having a lot of other components, but specifically price action. It's actually naked chart price action trading. In my price action trading, I'm using wave counting, I'm using chart pattern, I'm using chart patterns, candlesticks, support resistance levels. Um, as I use uh, simple chart patterns, at the same time I can use advanced chart patterns. Depends on the instrument and the environment. Okay, so today we're going to talk about one of my favorite London Open breakout. I remember I have screenshots from my trades since 2014. I didn't find any before. I'm not sure when I exactly started study the sessions and trade them more actively with a kind of systematic approach. But London Open was one for sure. I have traded it in 2014 because I have my screenshots there that are 9 years old already. But before that, I'm not sure. That's why I am saying 2014. I don't remember 2013 if I was trading London Open. Yes, London Open, yes, but the way I do it right now, no. Just the session I was trading, but the way I trade it now, I am not sure if it was in 2013. So that's actually one of very often question from you guys, from viewers, about London Open, sharing more specifics, more details, how exactly to prepare for that and what to do. If you have missed those sessions or if you want to refresh the page, that's the session for you to grab it, write everything down because listening won't help only. You will get some part of the information only. Write things down, ask a lot of questions in the chat. I know that we are streaming in YouTube right now, and all of you guys that are watching there, make sure you are dropping your questions in the chat and I will try to answer all of those. The session is designed for London Open breakout strategy. But again, if you have any other questions that you want me to answer, related markets, trading instruments, you have trade, you want to open a trade, whatever, just make sure it's in the chat so I will take care of the rest. Big hello to Boyke and William Moy. I see right now in the chat. Hello, good morning. Okay, that's quickly for me, guys. Let's dive into the information for London Open markets. Okay, what is actually London Open breakout strategy relies on? It relies on the liquidity that comes with the European markets. Okay, that's basically what we are relying on. It's data, it's um, logic behind. As we are coming after sleepy, quiet Tokyo session. Usually, Tokyo sessions are known for its low volatility, almost no volatility. And yeah, it could happen when there is an important news. Bank of Japan decides to shake out the world, the markets, or something in Australian markets may happen here and there. Yeah, we may get some volatility there. But generally speaking, Tokyo session generally comes with low volatility, and the markets are creating some tight consolidations, especially on the instruments that are trading against the euro and sterling, because before London markets, Frankfurt markets are opening, And when Frankfurt markets opens, we have some high volatility because some higher liquidity jumps in the markets. And exactly after the Frankfurt markets, London opens brings the highest volatility in currency world, in the world. um, it's arguable basically if the London brings more volume, more liquidity than USA, but statistics shows that in currency market, London is the biggest. In the stock market, US is the biggest. These things may change over time with changing of the conditions, environment, crises, boom, bust, but that's not going to change that London and US markets are bringing the highest liquidity in the world. The most transactions, the biggest moves are happening during London and US markets. So in order to recognize this pattern, it's a pattern, it happens almost every day, but sometimes this actually may break due to, as I said, trending Asia session, which we London Open breakout traders don't want to have. Like if we have, we just skip that day and we don't trade. We are totally flexible. We are not obliged to trade absolutely every single day when market opens. We need to stick to the rules and really keep an eye on the strict rules and strategies and points there, principles of the strategy in order to get the best out of it. Because if we just break our rules, and there is even worse thing than breaking the rules, it's to making money while breaking the rules. That's a funny part, and you'll say, why? That could be bad if you make money, even if you break the rules, because you will create bad habit, and this bad habit will lead you long-term failure instead of helping you to become successful. So don't choose short-term satisfaction in order to then a long-term success. Okay, that's going to be my suggest advice for you guys. So the setup requirements, as you can see here on the screen, we have looking at 1 hour and 30 minutes previous trend. Like we are looking at the price right now, and let's say we find tight consolidation based on our requirements, and the 2, 3, 4 days before, we will need to check the trending days, if the days were trending or they were ranging. You don't care about what is the trend. You care about if market is trending during the day. Last 2, 3, 4 days, if you have trending market, then then it's fine. Then most probably this tendency will continue, so you will get some good volatility, some good movement. But if before that you were having some choppy consolidations and stuff, you might suffer some ranging market again, and those breakouts might be fake. Well, that's a pure statistics. That statistics always can break. It has since varieties, but that's what we are looking and creating as a rules, important rules for our London Open breakout. So we should rely on something, on some data. And then we wait when we catch up this consolidation, tight consolidation, we confirm the previous trend and we confirm the tide range. Then we are waiting for the signal, which is coming with London Open breakout. Or sometimes for some instruments, especially Euro instruments, it could happen also on the Frankfurt Open. That's the glitch here, that sometimes we may get controversial trades, Frankfurt to break upside and London bring the market downside. In order to not fall in the trap, I will share a couple of tips for you guys, which instruments, how you can choose and trade them. So let's go for the next slide, which is London Open entry strategy requirements. Currency pairs that we are using are Euro and Sterling crosses, except Euro Sterling and Euro Swiss franc. I say expect statistically. Sometimes you might be familiar with fundamentals and you might know that Swiss franc may really bring huge volatility, and Euro Swiss franc can actually be good for London Open trading, or vice versa. You might recognize some great changes in the fundamentals in UK, which are actually not going to make currency correlate with euro, but huge disbalance between euro and sterling, and you might decide to trade that currency pair for that particular moment, 1, 2, 3, 5 days, depends on how long that fundamentals will affect the currency pair. But generally speaking, statistically, euro sterling and euro Swiss franc are not the best currencies to trade London Open breakout, for the simple fact that both are correlating with euro significantly. When you open euro and Swiss franc chart, you're going to see very tight consolidation, which is um, even the breakout that looks big in the chart is actually 7 pips, like nothing. Okay, it's very difficult to trade with good risk to reward ratio. Um, And we have Kevin Klux says hello, big hello, sir. Great to see you. Hope that's gonna see you in next couple of minutes in XM Live session here in the beginners room. Feel free to join there. Don't forget. Starting to invite you from now, guys. We are in xm.com live educational session. Feel free to join us even now. Then and watch all the sessions in the beginner and advanced room sessions. Okay, so after we find all the instruments, after we actually prepare all the euro and sterling crosses and even majors, on our terminal, we are looking for Tokyo session range identification. So we are looking for this tight sideways choppy range, which is very obvious, especially when you place your lines. And big hello to Akram again. When you place your lines, US close, Tokyo open to Tokyo close, London open. When you mark it, then you're going to see that tight consolidation very often. I'm not saying every day, okay? Because all the statistics are statistics, average prices, average moves, average stuffs. And sometimes you might get this a trending market where you have no signals on London market. You just ignore it and go for have a break for 1, 2, 3 days until the London market starts working again. Last week or two, we got amazing London Open breakout sessions. I remember I announced that to all of our viewers and my followers here in XM Live to look at this market that specific day, and we got amazing profits. Okay, early breakout identification happens in 15-minute chart. So what do we learn right now? How which instruments we will keep an eye and how to prepare for London Open breakout. Then when we are prepared, when we identify the tight consolidations, we are waiting for early breakout identification on 15-minute chart because that's the first breakout that we will see. If you wait for 1 hour chart breakout, you will miss the entire move, most probably. Sometimes if the move is very big and 1 hour candle can reach our target. Okay, so that's why we go for 15-minute chart and trade the breakout close on 15 minutes. We never trade running candle because you never know if that's not going to reverse and close like a pin bar. We need to wait for the real confirmation breakout on a 15-minute chart, opening the trade there and placing stop losses to the specific levels within the range or out of the range. The blind entry suggests that you need to buy exactly when the market breaks the range, not waiting for 15-minute close. The conservative entry is to wait the 15-minute close and confirm it's a breakout. The blind entry suggests that if price takes that direction, just go and ride it because the stop loss is even smaller. And if the market reverses back, it's fine. You have stop loss as you can get on absolutely every strategy. There is no strategy that promises no stop losses. So for the London Open breakout, if you're going to take aggressive entry or conservative entry, you can still have a stop loss. The thing is how you will follow your rules and how you will feel and you will how you will manage your stress levels. That's the only difference between those conservative and aggressive entries if they are both confirmation for that direction. For example, conservative entry doesn't mean it's stronger signal. It's just brings more confidence that the market finally broke out of this range and most probably will continue with the same direction. The blind entry comes with it could be just a spike and close inside the range and market may change. Either way, you can get a stop loss. And what is the better in this case is to use the better risk to reward ratio. So it's up to you how you will manage your stress levels. Try both entries. Try blind entries and try uh, conservative 15-minute close entries, and you will see that both gonna work and both will have its own pros and cons. Um, I don't have preferred entry, but I go with a blind entry often. Sometimes I do combination. I'm using London Open breakout as entry strategy for my swing trading. Da-da-da-dum. You can use London Open also for many to combine it with your swing trading strategies just as an entry without having a small stop loss. Okay, if you are even more conservative or you missed the entry level or the breakout on 15 minutes was huge, then you can wait a pullback after the breakout for next 45 minutes on 15-minute chart. That's important because 45 minutes must come with 3 candlesticks on 15-minute chart, which usually is pulling back down to retest the previous structure breakout high or low as new support or resistance. And that's the third potential entry. You have 3 ways to join this trend. Well, three ways, not necessarily they work every time. Sometimes market just breaks and never makes a pullback.